China's trade deficit widens as exports to Europe slow. Greece heads towards getting a second rescue package after last week's debt swap, and U.S. futures point to a mixed open. I'm Chao Deng, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Chao Deng with The Street. Together we bring you the Morning Call Express. Scott, futures are pointing mixed this morning. We had a roller coaster week last week. A lot of the focus was on Greece. This morning, the focus seems to be on China, signals of a slowdown with the trade deficit widening. What are you looking at?
This week we have a lot to look at. At least some of the problems of Greece were kicked down the road, so maybe we won't have to deal with headlines with that. But as you said, now they're talking about China slowing, a little bit of the trade deficit. But I think what's important here is the action of the market. Last week we broke that accelerated trend. We tested down to the 25% Fibonacci retracement, and we had a nice snapback. If you look at the chart here of the S&P, you will see this is exactly what took place. Here is that accelerated uptrend that we've been tracking ever since December 20th. Monday we closed below it. Tuesday you had that harsh down day right into this 1340 support, and then from there you had a nice bounce right back up to retest this broken trend line. So if you look closely here, a lot of traders are going to be trying to figure out what to do if this 25% retracement into 1340 was the correction, or do we stall ahead of resistance and do some sideways action, or do we try and pull in a little bit right around there?
So, Scott, because we were oversold on Tuesday and now we're coming back into neutral territory, how do we sort of gauge some of perhaps the early morning action here?
Well, whenever you're down like almost negative 80 in the McClellan oscillator, you can't be short. That means we're so oversold, we're drastically oversold, and that also gives you an indication you can get some type of bounce. So now coming in today, we're basically neutral. So we're not going to get any help from the oversold readings. So at this particular point, it'll be healthy to see what we do. And I think if you take a look at here one more time at the SPX, you will see, I think if the bulls can maintain a stance above these two moving averages again, just say above 1360, and we can go sideways here for a session or two, I do think that raises the probabilities that we take out these highs and we just continue the motion that we've had ever since December 20th, and then that would be a very bullish occurrence, or even constructive right around that area.
And Scott, it seems like there certainly could be some momentum for the buyers, especially last week when you take a look at retail, financials, and the home builder sectors. Those are strong, right?
Yeah, well, that's why we were encouraged. We're like, okay, we just corrected or we just came off the highs, but we didn't see much of a correction in retail. And if you look here at the RTHs, you will see, stock or this group actually made new highs already. So you go to the chart, this had to give you guys some confidence, or the bulls some confidence, when all of a sudden we held the 10-20 day here and we busted above the highs, giving some nice follow through. You saw some stocks like Lululemon back at 52-week highs, stock like Under Armour, which was downgraded today, so might rest at highs, so investors still getting rewarded. So right away, if the market was going to be that weak, they wouldn't have let retail go to new highs. And if you actually look at tech also, it too went above that previous high. So if you look here at the chart of tech, yeah, you did have a pullback into some support, and it already nudged a little bit above. So right now, I think there's definitely a case that that correction was the correction. But after a 3-day bounce, you just have to be a little bit careful maneuvering right around here.
And speaking about careful financials, we have the bank stress test coming up this week. How do you think that's going to affect that sector?
I think people are looking to see whether or not they could increase their dividends and their buybacks. Sometimes these regulators are trying to put their characteristics at unemployment still at 10% or even higher, or maybe if Europe goes back into a deeper recession. But at this point, the action in the financials have been strong. Stocks like JP Morgan, you take a quick look here, it made a higher high. So that was encouraging also. I talked about that on Friday. You look at the macro pattern here, this stock's been stronger. It came in, it only retested the 10-day. Didn't even get to the 20-day or the support, and it made a higher high, showing some health in the banks. I do think there might be a Q trade in Bank of America. I'm going to watch this one. Bank of America is going sideways. This is one of the stocks that people are going to be really looking at for the stress test. Here is your range. If Bank of America could start getting above 815, 820, that'll show that even some of these lower tier banks, because that's what I consider Bank of America, could get some progress.
And also casinos, you've been watching Las Vegas Sands. What's up with that one?
Well, that one's just been a good macro investment, and it's also been a good trading vehicle. Just to show you real quickly how you could time things, you look at Tuesday, I talked about a quick little cash flow trade, after this top right here, right around 53 and change, after a 3-day move, shorting into resistance, maybe a cover here. That just shows how you can maneuver or trade besides being just an investor holding for longer term time periods.
So in the longer form, we're going to jump into the high beta stocks. We're going to be talking about Apple as well. If you want to just mention that briefly.
Well, it's knocking on the door at the highs. If you want to tune in and you want to get the real chart patterns, tune into the long form, and we'll see you then.
Great, thanks.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.